My name is Topouzian. I'm the Executive Director for Michigan Venture Capital Association, and we're here with another one of our wonderful webinars that we've been doing since really the beginning of COVID. And with each of these webinars, we've been able to bring on some new and interesting topics, very timely discussions for the folks here to listen to and to ask some questions. And then also we are recording this and we will put it on our YouTube channel. So today it's a little bit different. You'll see that we've got already a presentation up for your viewing pleasure, but we're going to be talking about a very new fund, a transformative fund within the community, and hence the name, New Community Transformation Fund. It's out of Grand Rapids. I have the pleasure of knowing pretty well two out of the three panelists that will be presenting today. This is very exciting. It's definitely an exciting fund, and one that we wanted all of you folks to be able to have an opportunity to learn a little bit more about. So without further ado, I am going to hand the reins over to BIRGIT. BIRGIT KLOHS, who's the president CEO of The Right Place. For those of you that know economic development, know she is a guru for economic development. She's certainly a mentor. She's just great. She's all around great. So it's not a surprise at all that this new fund would come out of The Right Place. So BIRGIT, I'm going to hand it to you, and you're going to introduce our other two guests and then take it away.
Yeah, thanks very much, Ara, and thanks for the opportunity to address one of your webinars. I'm very pleased to introduce my partners in this venture, Scott Welch, who's the general partner of the fund, and KWAME ANKU, who is a consultant to our fund, but also the CEO of the Black Star Fund. And when I'm finished with my introductions and turn it over to Scott, they can also do a brief introduction of themselves. Suffice it to say, I wouldn't be here today without those two guys. So, but where did it all start? As Ara said, I'm the CEO of The Right Place. We are a 35-year-old regional economic development organization in Grand Rapids, and I have had the honor of leading it for the past 33 years. In fact, when the Venture Capital Association started, I was on the very first board. So I have a little bit of a history with venture capital and have always been a big supporter of the organization. We have a very successful track record as The Right Place and as West Michigan. And as some of you know, we've had a lot of accolades over the years in Forbes and many other magazines, first of this, first of that. And lately, our latest accolades came from The Economist back in June. All of that said, and we're proud of all of that, but we are not doing well in a very, very, very big area of our community, and that is that our communities of color have not participated in the success of West Michigan over the past 15, 20 years. And that has always been something that has not only bothered me, but it made it to our board and our board of directors. And about 3 years ago, we started an effort to diversify our supply chain by engaging our larger employers. Many of us in the economic development community are having deep discussions about how do we work more deliberately, thoughtfully, and authentically to bring better and inclusive growth to our communities of color. But we're also all asking how. Some of us are engaging in the talent equation of that work. We are too, through the Brookings Institution. But about 2 years ago, before the racial, before the murder of Mr. Floyd, before all of that happened, before the pandemic, before the economic problems we are facing, I had this crazy idea that money is always an issue for an entrepreneur, and it's a much bigger issue for entrepreneurs of color. We have many, many minority-owned businesses in West Michigan, but we only have a handful of those that actually create wealth. And the majority of the wealth that's still owned in our community is owned by people that look like me. And what do we do about that? So how do entrepreneurs of color actually access capital and venture capital? So I had this crazy idea one morning, and since it was a crazy idea in my opinion. So I thought I'd check in with my friend Scott Welch, whom I've known for many years and who was an entrepreneur himself. And we had lunch. And I said, is this a crazy idea? He said, no, I've been thinking about the same things and the same lines. And how do we really change the trajectory? And how do we actually move the needle when it comes to investment in our communities of color to create wealth? The outgrowth of that was that he actually knew a venture capitalist who's doing this. And that is how we met KWAME. And we invited KWAME to come to Grand Rapids. This is almost 2 years ago. In fact, I found the slide from November 1st, 2018, when KWAME came to GR, and we put a business plan together and presented it to Bank of America and then eventually Consumers Energy, because we also knew if we were going to do this, we needed some seed capital of our own. And thus the journey began. And it's taken legs. It has taken on, we are so grateful to B of A, as well as consumers for trusting in us and for really believing that there is a real need and that the need can be fulfilled, and that can change not only the trajectory of our businesses of color in Grand Rapids, but also the trajectory of the community. So with that, and not only that, it fits into our economic development strategy, because creating investment and creating jobs is what we do for a living. And so, as Scott likes to say, we added a demographic dimension to it through this fund. So with this, I'm going to turn it over to Scott and KWAME and let them tell you where we are today, the success, the progress we've made, and the way forward. So thanks, Ara, again, for the opportunity.
I'd like to echo that. Thank you, BIRGIT, and thank you, Ara, and everyone here. Again, my name is Scott Welch, Managing Partner of the New Community Transformation Fund. And I tell you, so BIRGIT got you up to speed with how this idea came to fruition. And of course, that wouldn't have happened actually without her. So it's absolutely mutual. You know, where we connected on this idea is that we've got plenty of benchmark reports, we have plenty of white papers, but that has to translate into action. Otherwise, it simply remains theory. And so knowing West Michigan as we do, and I've been there, my kids are fourth generation, but I've been involved in global business for much of my professional life, particularly in the global diversity, equity, and inclusion space with the Fortune 500. But I live in Grand Rapids, and so I know the opportunity that we have. And so it was time to translate the theory to practicality, to action. And that is where the New Community Transformation Fund was born. And of course, with ours common as well, it is about transformation. And so that is where we are into the throes of this. We've got some really wonderful momentum, and we'll articulate that in the course of the presentation. But before we get into that, I want to introduce, of course, our colleague and dear friend, KWAME ANKU.
All right, well, good morning, everybody. Thank you so much, team, for the wonderful introduction and start. Coming to you from Sacramento, California. As BIRGIT mentioned, in addition to being the consultant for New Community Transformation Fund, I also run a fund called Black Star Fund. And it's my venture capital fund that focuses primarily on African-American technology and innovation leaders. Prior to that was the co-founder of Black Angel Tech Fund. So literally the only venture capitalist in the country that's got 2 funds with all Black founders. So very proud of that. Prior to that was working with Prince, as I like to joke, the musician, not the British royalty, and actually did some extraordinary work with him in an organization called Yes We Code in Michigan, and had the first nationally televised hackathon actually in Michigan. So, and I'm originally from Ohio, don't hold that against me, but excited to be connecting with folks in the Midwest. I'll just say this at the outset, you know, I consult for funds across the country, obviously run a fund, and I can tell you, as you see the information we share with you today, this is a very special fund. This is a fund that has some unique aspects to it that I actually have not seen in any of the work that I've done before, which means that we're dealing with something that's very innovative, not to mention transformative. So, you know, happy to be a part of the team, happy to share this information with you this morning. And we think that we're really on the precipice of something that can be nationally game-changing.
And so what we have here is a $25 million venture capital fund. And I think it's important. There's three main things around this. And that is, while we all believe this will have great social impact, this is not a social impact fund. It is what it says it is. It is a venture capital fund, a $25 million venture capital fund. It works on primarily two tracks. First of all, it is focusing on those founders of color. And these are early to mid-stage scalable organizations in industries such as it says, advanced technology, life sciences, medical devices, food processing, agribusiness, fintech, sports tech as well, those types of things. Again, very scalable. And these are organizations, again, in that particular part of their life cycle, early to mid-stage. The other track that we're on is focusing on transition and succession legacy businesses as well. You know, for the founder that is just wanting to do something else, or maybe because they've been doing it for some time and their kids may not want to be a part of the next iteration. Our focus is actually to go in there, work with our bank partners, help them purchase the company, and then invest in terms of operations capital. So the founders, scalable businesses, and also legacy businesses. Now, the other part of this is that the organizations in which we invest, they have to commit to moving to West Michigan personally, as well as moving most of, if not all of their operations to West Michigan again. Because as Birgit alluded to earlier, we have lots of really amazing lifestyle businesses, but we're really looking to create wealth. And these are catalyst opportunities when you either acquire an existing business or you have a founder that leads a company that is on its next level of trajectory. And so we'd like to share in that. We'd also like to introduce them to our community, have them become a part of that community. And that is why the requirement is that they become members of the community. As you see, we mentioned, Birgit mentioned earlier, this would not have happened without two of the earlier adopters. And this was not as LPs in the fund. We'll get into that. But this is where Bank of America, Consumers Energy, with Renee Tabin and Garrick Rothschild, respectively, saw the need to actually stand the fund up in terms of getting it set so we could go and do the legal work, the accounting work, and so that KWAME and I could actually spend devoted amounts of time on this. And so they each came in at $200,000 each. We're forever grateful because this gets us to this point today of speaking to you. And again, with Birgit, and again, a dear friend, she just, the track record of the right place, you know, since 1985, over $5 billion in investment, 45,000 jobs, and a playbook that is, you can't argue about the fact that it is successful. Our focus is that we put, you know, the ecosystem that the right place wraps around businesses already in terms of customers and markets and helping them find a place to locate and the founders becoming a part of the community. But as she said earlier, we are actually putting a demographic lens on it. And that would be for founders of color so that they also come and benefit from the right place playbook. And we want to create a space for the founders of color, the entrepreneurs of color, where they're not simply welcome to West Michigan, but where they can actually belong. And so we know that the right place has been doing that so well for many years. And we want those founders to also be a part of that and to be a part of our community. And as you see, we've experienced some really, really great momentum. Our initial kind of milestone was to raise 5 million locally. And as you can see by the number above, we've actually exceeded that. And we actually have about 17 million, and KWAME will verify that or correct me on it, but 17 million in the final stages of the pipeline as well. So we're experiencing great acceptance. And I think it's noteworthy to say that even after the COVID and all the different pandemics, I call them, and with George Floyd, we had not, even prior to George Floyd, even at COVID, we have not experienced one meeting cancellation. They simply went online. And so I think that expresses the desire to do something, the desire to do something concrete, because we have just really been well received. And as you can see from Gentex, Consumers Energy, that's a new one. KWAME can talk about that as of today. Spectrum Health Ventures, Mercantile Bank of West Michigan, Rockford Horizon Bank, Wolverine Construction Building Group, John Kennedy, Sid Jansman III, and the list, there are more. but those are the ones we're actually introducing to you today. And at this point, we're at a $6.25 million raised. Tina Fries Decker, wow, you know, with Spectrum Health Ventures, Spectrum was the first organization to say, we are in, and just enthusiastically so. And I do think it's noteworthy. We wanted to get her picture, but also the fact that in terms of their commitment, she wanted to articulate it. And it says, we are proud to partner in establishing the new Community Transformation Fund. The funds are intended to increase ethnic and racial diversity in ownership and entrepreneurship in West Michigan. Investing in partnerships that enhance equity and strengthen our community is consistent with our mission to improve health, inspire hope, and save lives. And we are, again, very, very appreciative of Spectrum Health Ventures and Tina Fries Decker and our team. And also right behind that is Bob Kaminsky, the Chief Executive Officer of Mercantile Bank of Michigan, who says, the new Community Transformation Fund has the potential to be a needle mover for the advancement of racial diversity for business ownership in West Michigan. Mercantile Bank of Michigan is pleased to be one of the initial investors in this fund, and through it, we remain committed with all of our community partners in working to ensure that business opportunities are available that will create a strong and sustainable economic climate in which everyone in our diverse communities can participate and enjoy. And again, we're delighted to have Mercantile Bank of Michigan as a part of those, what we call our inaugural trailblazers. Here's our board. As you can see from left to right, of course, BIRGIT, who's with us today, as the president and CEO of Right Place, Crystal Jackson, who is the head of Head and Heart Philanthropy, who curates some of the most amazing ecosystem and events as it relates to bringing founders of color and entrepreneurs of color and investors of color as well, and even the broader kaleidoscope of what I call the mosaic into the same room to see how they might actually grow and impact communities around the nation. Myself, of course, and then Renee Tabin, Bank of America, Gary Rothschild with Consumers Energy, respectively. And I think what's really critical about this is as you see the pictures, that's fine. But what is important is that this is a working board. These are folks that roll up their sleeves, they help connect the dots, and I really, and in all of our funding to date, they are very, very instrumental in helping us get to this point. And so they're leveraging their resources, their influence, their connections to socialize the fund to get us to that to the benchmark that we are approaching here quickly. And I'll turn it over to KWAME.
All right. Well, thank you, Scott. And before we jump into these numbers, I do want to highlight kind of a point I made earlier about the uniqueness of this fund and uniqueness vis-a-vis other things that I've seen. Not only are we talking about a diversity-focused fund, not only talking about a unique geographic region of West Michigan where something like this has never been done before, but when you look at these numbers, there's a reason why these numbers exist the way that they do. And it's easy to just write them off as things like, unconscious bias and systemic isms, which are part of the dynamic. But if you think about it just from a business, mathematical, and historical perspective, if you start a system of venture capital the better part of 40 some years ago, for 4 decades or more, where you've got gains, you've got returns, you've got the birth of hundreds of venture funds and some massive funds, particularly in Silicon Valley, that have not been particularly exclusive historically. You're talking about literally a light year advantage. If you're thinking about a race, that's to a large extent why the numbers exist. The question becomes, well, then how do you close that gap if you're dealing with kind of light years of distance? Well, it's very simple. You have to have quantum leaps forward. And in order to have things that you've never had before, you've got to do things that you've never done before. So to be as innovative and creative as we are in so many other arenas, whether it's just, Elon Musk putting up, communities on Mars, whether it's, splitting atoms, when we put our heads to anything, particularly as Americans, we figure things out. We take quantum leaps. We lead the planet in everything. And so we're going to be very bold in our quantum leap in this arena in venture capital. What I want us to think about is Scott walked us through the formation was not just kind of a historical record of, we seed grants and you put these boards together. No, typically the barrier to entry is 3 to 5% GP contribution. Typically, if you're dealing with a 2% management fee, you can't really get anything done unless you're dealing with a $50 to $100 million fund. So if these wealth gaps exist to the extent that they do, how then do you create funds with diverse founders who are already light years behind in order to be able to have a significant contribution of venture capital for hyper accelerated growth and wealth building. So those barriers are there kind of systemically to prevent that from happening. So it can't be understated that the $400,000 seed grant is a new model. This is something that can be done across the country. So you've got philanthropic organizations that seed the beginning of it, and you put the fund together the way that we're talking about here with a new community transformation fund. When we talk about being incubated at the right place, when we talk about the playbook, you've got an exceptional organization with a 30+ year track record, 45,000 jobs, $5 billion of outside investment. So this is not Scott and a handful of people trying to figure out some deals and sourcing and doing due diligence and hoping that they can find some outliers. This is in tandem with a multi-decade organization with processes that have brought companies from all over the world to a region that they would not normally come to, from Germany, from Italy, from Mexico, and thrive as companies and then be an economic engine for that particular community. So the stakes here are very high. Now put that in context of post-George Floyd, COVID, and then everything, the significance, I think, of what we're sharing with you goes to a different level. Now, that said, $136.5 billion of VC funding in 2019. The numbers on the right is the ethnic breakdown of the founders that have received that capital investment over the last 5 years. Now, at first blush, a lot of the reaction can be, this is, yeah, we didn't realize it was this low. This is not right. These disparities are staggering. But, you know, as sophisticated VCs in this community and part of the venture capital, machine, we have to be honest about the numbers. If what we were saying was true around that disparity and kind of being behind, if you will, the reality is you didn't have a plethora of companies really ready for a Series A venture type situation over the last 5 years, not to mention the prior to that. That's what these numbers are reflecting. What they don't reflect is the massive influx of capital that have gone into the early stage companies, 2014, 2015, 2016. And now those companies are primed for VC funding now in 2020, 21, 22, 23. Now I can tell you as a VC myself, I'm invested in some of these companies. So we're about to start seeing these companies break, getting Series A, getting significant capital, and these numbers are going to shift pretty dramatically. We see the beginnings of that with the new funds, the New Voices Fund, $100 million fund for women of color, founded by Rich Lou Dennis, the founder of Shea Moisture, who sold that company to Unilever for $800 million. We saw that with Harlem Capital, exciting fund, diversity-focused fund. They closed a $40 million fund at the end of 2019 with the state of Michigan as one of their LPs. Plexo Capital, Lo Tony, great friend of mine, really a pioneer VC in this space, was at Comcast Ventures, then a partner at Google Ventures, incubated Plexo at Google. Notice the same playbook, incubating a new concept at an established organization. They became his LP, first LP, and then went out and raised over $40 million for that fund. So the list goes on and on of this pendulum shift that's been happening over the last 5 years, with obviously our fund included in that. Now that said, this is where everything changed in 2020. As bizarre of a year for all of us as this has been, things are changing in a very significant way. When we talk about the diversity landscape now in 2020, vis-a-vis the slide that I just showed you, you are literally looking at over $26 billion of capital that has been allocated with the specific purpose of closing the wealth gap and confronting racial inequality head on. Everything you're seeing on this screen was since June 1st of this year. Really kicked off by SoftBank with a $100 million opportunity fund for founders of color and fund managers of color. They'd never done anything like this before. And that announcement was literally a week and a half after George Floyd was killed. So whether it's Huntington Bank, $20 billion, Alicia Keys, Grammy Award winning artist, partnering with the NFL, $1 billion fund, Bank of America, PNC, Citibank, Google, YouTube, PayPal, Comcast, Sony, Apple, Square just a few days ago. People are adding to the list every day. So again, I can brag on my partners a little more than they can. Their idea and their vision was 2 years ago. It was literally over 2 years ago, because the first time I met with them was 2 years ago. But over 2 years ago, as they shared the story, there was this vision of how are we going to be part of the solution as opposed to part of the problem by not being involved. And so now this seismic sea change that we're seeing in the country is the rest of the world stepping up. But what this also means is that we are all part of something that for the first time can actually close this gap. We're not talking really about moving needles. We're talking about like tectonic shifts. And that's all, I think, proven with this slide. So we think about the uniqueness again of structure. Early and mid-stage growth companies on one side of the house, and then legacy transition businesses on the other side of the house. So traditionally, that's really in the world of private equity, right? So by keeping these things together, now you've got a model where perhaps both sides of the house can actually benefit from one another. But remember the name of the fund and really the mission of the fund: New Community Transformation Fund, transforming communities by investing, hyper accelerating growth to create generational wealth. So we want to be able to buy legacy businesses locally, working with our bank partners. We want to be able to identify top tier owner operators from anywhere in the state, and if need be outside of the state, they can come to West Michigan to run the businesses that we buy. Capital infusion from the fund. Not to mention, by investing in early stage, mid stage, and exciting different arenas, those companies may have technologies that the legacy businesses can benefit from. And then the key thing you see on the right is the business development and support, right? Oftentimes when we're thinking about venture capital, we're in the office, we've got our analysts, we kind of are in somewhat of a silo. Sure, we've got a great network and pick up the phone when we need some help for our portfolio companies. But this is different. This is literally deliberately building the ecosystem specifically to hyper accelerate the portfolio companies. So when we see those names like Spectrum, Mercantile, they have stepped up in a significant way. Yes, they're the inaugural trailblazers, which is phenomenal, and we're excited and proud to work with them. But quite frankly, more importantly, they are joining the machine that the fund will be able to call on talent, expertise, networks to be able to hyper accelerate the growth of the fund and help those portfolio companies be successful. So we are certainly not operating in the traditional realm of invest in 10 companies, 7 will fail, 2 will return capital, and 1 will be a unicorn. We are investing in a portfolio of companies for success, the same way you'd be investing in students starting at a university. You're doing everything possible for all of them to be able to get through the 4-year study, graduate, and go on to success. That's the same formula that we're using here. $250,000 to $500,000 will be the initial checks, and as Scott mentioned, we've got a great array of verticals we'll be in. And then, and so that's the information that we wanted to share with you today. Really excited about this transformative fund, excited and proud and honored to be a consultant, to help share a little bit of expertise and experience that I have to be able to help make this effective and successful. And, we're hoping that we're working hard. Hopefully you're excited about as we are, but we're working hard to have this be an example and really a beacon and a model that can be used across the country. So with that, I'll turn it back over to my esteemed colleagues for any questions and feedback.
Hey, KWAME, thank you. KWAME, Scott, BIRGIT, thank you very much. For the folks that are attending, if you've got questions, now is a great time to ask that. We've got a few minutes where we can answer some questions. I did get a question where asking if the presentation deck will be available to attendees. I'm assuming we can send that out to the folks that have registered today. Does that sound okay by all of you? Yep, you're nodding yes. Okay. We got another question. When will the fund begin making investments? Who'd like to answer that?
Go for it, Kwame.
Excellent. Yes. So we plan to start Q1 of next year. We'll be vetting the initial deals, I believe, in November. And then we will be making those announcements in Q1 of 2021.
Awesome. How do you see deal flow in West Michigan?
I think what's important about that, I want to have my colleagues also respond, but I do think that it's important that we have organizations, and of course, we're actually making investments locally as well. But part of this is actually casting a very broad net across the nation. And so it is both it's pipeline opportunities that are in our backyard, but also we're going to other parts of the United States where this population it's very robust, but oftentimes, as Kwame alluded to, it's off the radar. So we will be doing actually both West Michigan presentations and investment, also be going and gathering talent and recruiting talent from outside of West Michigan as well.
Great.
Yeah, just a quick add to that. You know, when we think about deal flow in this particular arena, and I noticed this when we started my first fund, there was a question, not that this question was that, but I just want to make the point around, well, you know, if you're dealing with these diverse founders and the numbers are so low, is there really a deal flow? What are we really working with here? Here's how it actually works. There is an extraordinary number of deals. And what happens is that these companies that have been historically overlooked are also profoundly undervalued. And so we're talking about exceptional ROI opportunities,
Right.
because not only are they undervalued and it's not being exploitative of them, they are ecstatic to have folks of color running a fund who actually believe in them. And they want to work deals that are mutually beneficial. And I'm not saying that theoretically, this is what I do every day. So I can tell you the deals that we have, I've invested in a company 3 years ago, $350,000. By the end of this year, that value of that investment will be about $15 million, right? And in that arena, her company was $10 million. Comps of her company were raising $300 million with no product in the marketplace, no users, and just for R&D. That's not a $300 million valuation. That's how much they were raising to develop the product. So her company already has users, already has global footprint, already has traction, already has revenue, already has massive deals with the biggest companies in the world. But we got in at a $10 million valuation last year. So the companies that folks have historically not been paying attention to, one, they are undervalued. And two, these founders are like all other founders. They're going to get it done regardless if anybody's investing. They're not waiting for money and then they can't get it and somehow they fold.
Right.
They figure it out. And so that's who we're working with. So we definitely have kind of the inside track to exceptional networks that exist across the country. And obviously with Scott's work globally, you know, this fund is uniquely positioned to access great deals.
Great.
Yeah, and it's a really good question because West Michigan is not that large of a community, so I understand the question. But we do have entrepreneurs locally. With KWAME's and Scott's network, I believe we can access entrepreneurs elsewhere. You know, I access companies all over the world and bring them here. So I don't see why we cannot do that in a different kind of demographic. And then, of course, West Michigan, if you look at the second leg of the stool, it's legacy companies. And we're starting to experience second, third, and fourth generation businesses, 10 million, 25 million in sales, coming on the market. And part of this is, in a positive, selfish way, a preservation of local ownership. But we want the local ownership to be from our minority community so that we can invest and really accelerate wealth creation and minority ownership in our wealth creating businesses. And we have, as the right place, we have known all of those companies for 35 years. And our board does as well. And it's in our interest to keep those companies locally owned, increase minority ownership, and continue to bring innovation to those businesses so they can go on another 2 or 3 generations. And I think that's the other half of the deal flow, in my opinion, where we at Right Place can bring a unique perspective and the connections that we have and the networks that we have. And this is something that the 3 of us, Kwame, Scott, and I, have discussed a number of times. Deals get done often in, over a glass of wine someplace. And that's how, or somebody gets on a board because, I know Kwame, he's a really good guy, and, we're looking for a board member, What we've experienced, at least in my experience over here, is we all have our networks. And to bring entrepreneurs of color into those networks is going to be part of what we call these wraparound services, so that they become part of the community and participate in leveraging the networks. And I think that's an intangible, but I think it's a really important.
Birgit, just to kind of follow up with a little bit of that, let's talk more about sort of the portfolio construction too. The number of deals you guys have, ownership. Who would like to talk a little bit about that?
Yeah, I can start. So we are in the rapid process of still building the fund. So this is not an announcement that the fund has been completed and then, let's talk about kind of how we're operating. This is really more, we are in, rapid development right now. We are focusing primarily like 95% on closing the fund, so raising the fund. But the plan, it's really a theory around construction, right? And I think when you're dealing with this particular niche of founders, remember you can't overstate the gap. But when you're dealing with the gap, it also creates a very unique opportunity. Let me explain what I mean by that. I liken it to, imagine you didn't have any African Americans playing in the NBA, and the year is 1984. And your job now is to scout, and the NBA says, hey, we're gonna have African Americans play in the NBA. And there's only 3 scouts. Michael Jordan is literally sitting right there. Magic Johnson is sitting right there. Patrick Ewing is right there, right? Larry, all these people are literally right there, ready to get signed, and there's only 3 scouts. So here, what you're talking about is people who you've got this long line of people who's outside the door, right? And they're exceptional founders with exceptional breakthrough technologies, right? So the construction then is to create a portfolio with this synergistic connections with your own portfolio. And what I found, and I use this playbook myself, is that it also makes it much more efficient when you're running the fund, because there's synergies between the companies themselves. And then they're able to work together. And then when you're dealing with partnerships, again, when you look at Spectrum, for example, and we haven't started this process, but it was so exciting when we started talking to them originally. It's Spectrum Health, obviously that's behind it, but it's the venture group that actually is making the investment. Right? And these guys are so far down the road in terms of their thinking about venture and deal structure. So for us to be building a portfolio where we basically have them not only as a partner, but quite frankly, is to some extent like a mentor venture fund. And then you've got access to that entire network of Spectrum Health in terms of technologies. So it makes sense as you're constructing your portfolio to construct it in a way where you can leverage the relationships that you have, again, for hyper acceleration and growth. You see what I mean? Yeah. So it's a very unique thing where you're just not dealing with this relatively traditional view. Let's just look at a bunch of deals, have a rudimentary due diligence process. They got to hit certain metrics. We like the founders. Well, let's just give it a shot and see how it works out. Right? We're really taking a different process here.
Right. So you know what a sign of a good webinar is? A ton of questions and not enough time to answer all of them. So I'm going to kind of jump around and pick a few here and there. We appreciate all these questions. These are all some great questions, but let me ask you this one. We got a question, besides minority ownership, what are the other criteria for investments? What represents minority ownership?
We're really talking about communities of color. So, we're talking of course, Native American, as really alluded to mostly what the slide was talking about that KWAME showed, but from Native American, African American, Latino, and so on and so forth. And again, and in addition to that, as we said at the initial outset of the slide, and that is, these are scalable entities. These are organizations that have the type of business and that the desire actually to grow and to scale. So it's really those two main things, and of course on the acquisition side, the succession side, those are organizations that already have traction. And so we believe that they're existing. We find a founder, we find an entrepreneur, and somewhere maybe locally, nationally, regionally, help them acquire that business through our banking relationships and help fund operations. But they come to the table with 10, 20, 15, 30 years of background. It might be from the big 3 that they work for, all the way to organizations working in wherever that we might find them. But the point is, so it's the communities of color plus that acumen. And in the industries that we believe can be scaled, or in the case of those succession companies, it might be IT optimization, some type of digitization of that organization in some way, shape, or form to help them do that.
Will you syndicate with other funds such as angel groups?
Absolutely.
Absolutely, yeah.
Okay.
Yeah, I mean, you need to leverage and to bring additional capital to the party, right? Absolutely. We've already had many conversations with those kind of groups, both here and across the state.
Right.
Yes.
For sure.
Okay. And BIRGIT, this is totally in your wheelhouse, because someone is asking the question about, what makes Grand Rapids unique. And I know that we've talked about Grand Rapids in the venture capital community a lot lately, and there's been some major successes, but questions coming in about really what makes sort of West Michigan unique for founders. Why? So Scott, you mentioned early on, part of the requirement is locating to the area. What types of amenities and other uniqueness makes Grand Rapids an attractive place?
Well, that is in my wheelhouse. Thank you very much. And I have to talk about it a lot. In fact, for the first time in my 33-year career here, I'm going to do a German foreign direct investment mission completely virtual. For the next 2 weeks, I'll be on the phone starting Thursday. Instead of being in Germany, I'm being here. So the explanation is, I mean, this is it's a very successful community. It's a very, it is a community that has a high quotient of still superb manufacturing companies, very high. Nobody ever thinks of Grand Rapids as an education community or a university town, because there's Ann Arbor and you have East Lansing. But the fact is we have 83,000 students locally. Many of them students of color. They ought to have opportunities, but they are also the talent that drives this region. We have a very, very engaged business community here that embraces new investment. We have philanthropy that is terrific. We have good government, and we have a really good quality of life. And we want others to be participating in that quality of life. What I think I value the most here is collaboration. We have collaborated to get this community to where it is today, and we're embracing a new collaboration that means, when we've recognized we are not doing well in this particular area, and everybody is on board. And that's what's kept me here for 33 years, is we identify a problem and then we help solve it, right? And then that's when we really get to our metrics. But the community has been uniquely successful, and there's a lot of innovation going on here, and it's an entrepreneurial community. If you look at the companies that are here, if 2/3 of your businesses are still family owned, so there is a lot of entrepreneurship, and I think that fits what we're trying to achieve here.
Well, we've run out of time. BIRGIT, thank you very much. KWAME, Scott, I love what you're doing to your decor in your office. I'll send you some picture hangers. You can put some
As
stuff up.
we're remaking the office right now. I did the best I can with some art from Haiti. So
I'm just teasing.
We like your those. I mean, obviously you're a Charlie Chaplin fan.
I am. I know that's a little bit. Yeah, I'm in my office.
Right.
But hey, I want to thank the three of you for being on here today. I apologize we didn't get to everybody's question. Certainly, when we put this out there, we will put your web links out, and I anticipate that the three of you are going to hear from a lot of other folks. And so I wish you the best of luck in all of these efforts. It's needed. We all agree that it's needed. And we're happy to help push this out there for you. So again, I want to thank you. KWAME, good meeting you virtually. Maybe you'll make it this way to Michigan soon. And Scott, old friend, good seeing you. BIRGIT, same thing.
likewise.
It's
Likewise.
great having.
Good to see you, Ara.
Great
And
having
thank
all
you
three
very
of
much.
you.
And anybody who has questions, just shoot them to us and we'll figure out who's the best one to answer. Right.
Absolutely.
Awesome.
Thanks, everybody.
All righty.
Okay.
Take care,
Everybody, if
everybody.
there's for more information on Michigan Venture Capital Association, we ask you to go online to michiganvca.org. We do have a link for our YouTube channel that will have all other videos as well. And again, thanks to our service providers for helping put this on today. And with that, have a terrific day. Bye, all.
Thank
All
you.
right.